Hey everyone, my name is Paul Vojchehoske and welcome to the Real Estate Classroom YouTube channel where my mission is simple, and that's to help you pass your real estate exam the first time. Today we're going to continue our key vocabulary word series. We're doing words 178 through 182 of 300. Now every word or term we're going to discuss here evolves around what's known as taking title and holding title. So number one, remember, title in real estate means ownership. So when someone is taking title, when I'm taking title from you and I'm going to hold that title, meaning title is transferred from you to me, so I'm taking ownership from you and now I'm holding title, we have to hold it, take it and hold it in a certain way. And that's important because depending on how I take your title and hold that title once that property's been transferred to me, the ownership in that property, it impacts my ability in the future to transfer it to somebody else. There may be things defeating my ability to do that, depending on how I take and hold title. And secondly, it can have tax implications, and we're going to discuss those. Now, understand that taking and holding title falls into one of three categories. We're going to talk about two of the three. The first one is severalty. This is where someone, a single person, owns the property. Number two is co-ownership. Maybe I own this property. I'm taking title from you and I'm going to hold it in a certain way where it benefits me and my spouse or me and my business partner. Those are called co-ownership, where there's two or more people that have an interest in that property. Now, sometimes the co-ownership is known as concurrent ownership or concurrent estate. It just kind of depends on the state that you're operating. And the third one is when property is held in a trust for the benefit of another. We're not going to talk about trusts in this video. All right. Now, the first key term, number 178, I want to talk about is severalty. So when someone takes property and they hold it, in severalty, that means single ownership. Now, that can be an individual person or it can be an entity that owns that property, such as a corporation or a limited liability company. All right. Now, severalty means single. So if I take title from you and now I now hold that title, meaning I'm the owner, title has transferred to me, I have the sole right to do whatever I want with it. I can sell it. I can lease it. I can take out a mortgage. I can will it to my heirs. I can give it away. I can give a life estate. There's no one or no entity that is defeating my ability to solely do that. That is severalty ownership. The next way to take title and hold it is called tenancy in common, or sometimes referred to as tenants in common. Now, there are a couple of things you have to know here. Number one is the property has to be owned by two or more persons or entities, meaning limited liability company or corporation. So let's say, for example, that me and my business partner, we are purchasing your property. So we're going to take your ownership and then hold title between me and my business partner as tenants in common. That means two or more parties. Another thing is there is no rights of survivorship, and I'm going to talk about that in the next slide. Now, the next point I want to talk about under tenants in common is each owner's ownership interest, passes by their direction. And what I mean by that is my business partner and I bought your property and we hold this property tenants in common. But if one of us were to die during our ownership, then we can direct who gets our legal ownership interest in that property. I can will it, I can give it to my spouse. Maybe I'm going to offer it to my partner first as a buyout. And if that partner doesn't want to buy it out, then it goes to somebody else. That's what I'm talking about here. Now, the next one, each owner has an undivided interest in the whole. Now, the term undivided interest, that means that you cannot segregate or partition the property. So in our example, my business partner and I we took title from you, we purchased it, and we hold title as tenants in common. We couldn't say, I'm going to own the upstairs and my business partner owns the downstairs. We both have an undivided interest in the whole. Okay, the next bullet point is ownership available for undivided interest. That simply means that, for example, in our scenario where we purchased your property, my business partner and I, maybe I put in $80,000 of a $100,000 purchase and he put in $20,000 of this $100,000 purchase. So we organized it in a way that I own 80% and he owns 20%. That is an undivided ownership interest. The next bullet point, the owner, each owner, my business partner and I, we may sell our interest without consent of the other, and that means title can be acquired at different times. That's important to know as we get into the next part of this video. So, we took title from you. We held title once we purchased the property from you in tenants in common. I own 80%, my business partner owns 20%. That's an undivided ownership interest. But let's say that my business partner needs the money and wants to sell. So he can sell it to me or anybody else without my consent. And therefore what happens is myself and the new owner, we have acquired title, meaning we've acquired ownership at different times. Tenants in common provides for that. Other types of holding title does not, as we're going to talk about in a little bit in this video. Number 180, the next type of holding title I want to talk about is what's called joint tenancy, or commonly referred to as joint tenancy with rights of survivorship. Now, first of all, most of the time when we think of joint tenancy with rights of survivorship, we think about spouses purchasing property and they're going to hold title as joint tenants with rights of survivorship. And certainly that is very true, but it doesn't have to be. It only requires two or more persons. It can be a son and mother. It can be two business partners. It can be brother, sister. It can be anybody, but it cannot be an entity such as a limited liability company, a corporation. It has to be two or more individuals. All right. Now, when one of the owners die, the entire ownership interest of the deceased person reverts to or transfers to the other surviving joint tenant. So my wife and I purchase your piece of property. We're holding title as joint tenancy with rights of survivorship. If I die, then my ownership interest automatically reverts to my spouse. Now, another aspect of joint tenancy is an owner may sell or convey their interest, but the new owner is not holding title as joint tenancy with the other. Now, I'm not going to go any further than that in this video. I did another video, and I'm going to put a link to it right up here in the upper right-hand corner, that we go deep into the whole scenario of all these different types of holding title, tenants in common and joint tenancy. So if you don't understand it, might be a good idea to put that video or this video on pause and go check out that video that I put up here, the link to in the upper right-hand corner. All right, now the next part is very important to understand. There is 4 essential elements of creating joint tenancy. So now remember, my wife and I are taking title of your property because we purchased it, right? And we're going to hold that title once we own the property in joint tenancy with rights of survivorship. But before we can do that, these 4 essential elements must exist before we can take title using joint tenancy. Number 1 is called unity of possession. That means there's an undivided right to possess. We can't segregate it. We can't say that you possess the upstairs and I possess the downstairs, right? It has to be unity. I have just as much right to the upstairs of the property as I do the downstairs, and the same for my spouse. Unity of interest, equal ownership interest. We can't have 80-20 ownership like we did in the in the previous slide under tenants in common. It must be equal. So if there's two owners, my wife and I, that means it's 50-50. If there's three owners, me, my wife, and my son, then it's 1/3, 1/3, 1/3. Each joint tenant must always have equal ownership. All right. The next one is unity of time, meaning we acquired ownership at the same time, usually right at the closing table. When you transferred title to me and my spouse, we did that at the closing table. So we acquired time or unity in time at the same time. Number 181, tenancy by the entirety. Now, tenancy by the entirety is reserved only for married persons, period. All right. So there are some things about tenancy by the entirety you have to know. Number one, there is a provision that allows the rights of survivorship, as we discussed in the previous slide. There is a mechanism for rights of survivorship. Number two is each owner has an undivided interest, meaning an equal interest, ownership interest in the property. Number three, while the husband and wife or the two partners are alive, the only way that they can convey title is by each spouse signing one deed. All right, so let's say that my wife and I, we own this property and we hold title as tenancy by the entirety and we're going to sell it to you, then both of us have to sign the same deed. We could not sign separate deeds. And then the last thing is the parties cannot convey their interest without the other. I cannot convey my interest to someone else and my wife remain an owner. We can do that with joint tenancy and we can do that with tenancy in common, but we cannot do it by tenancy by the entirety. Simple little distinct difference there between tenancy by the entirety and joint tenancy. And then the last one, 182, is what we call community property. And I think as of the date of this video, there's only about 9 states that actually recognize community property. Community property says that each spouse is considered an equal partner, unlike most states where they consider spouses to be equal or one. Each spouse is considered an individual equal partner. So on your screen, I've kind of outlined some of the provisions of community property. Number one, there's no automatic right of survivorship. When we take title to the property, we can certainly include provisions that does create that right of survivorship, but it's not automatic. Number two, real and personal property owned by each when they enter into the marriage remains theirs. So my wife and I, we get married. I have assets and she has assets. When we get married, those assets are separate. We can keep them separate from the marital estate. All right, they're not considered community property. The next one is the property acquired by gift or inheritance during the marriage or purchased by separate funds are not the property of the other spouses. So let me give you an example. Let's say that my wife and I are married and my father passes an inheritance to me. Well, that inheritance is mine and my spouse has no claim to it. Also, let's say that I had a separate bank account when my wife and I got married, and then I go out and I buy a piece of property using just those funds. Again, my spouse does not have a claim to that under community property. The next bullet point, income earned by those separate properties remain with the sole spouse. Again, I go out and I buy property with my money that's not commingled with my spouse's. Therefore, any monies or income that property generates is all mine and my spouse doesn't have a claim to it. Then let's look at the next bullet point. I can convey property without the other spouse's signature. So if I have that property that, let's say my father willed to me and I'm going to go ahead and sell it, I'm the only one that needs to sign the deed. In almost all other states, the spouse, in most states, there's a marital interest, but not in community property states. So my spouse would not be required to sign that deed. All right, now, the next bullet point on your screen It says any real or personal property acquired during the marriage is equal between the spouses and would require both spouses' signature to convey title. Real simple. My wife and I get married. It's a community property state. We buy it. We buy this house that we're going to live in while we are married. Then if we're going to sell that property, then my wife and I would both need to sign the deed. All right, the next bullet point, spouses can will their community property to others, but surviving spouses will receive 1/2. So my wife and I, we purchase a piece of property. We are a community state, but we purchased it together. So therefore, both of us have an equal claim to the property, but we did not title or hold title as joint tenancy with rights of survivorship. So when I die, I can will my half off to my estate, or when my wife dies, she can will her half off to her estate. The key to remember, though, is each spouse, my wife and I, we are at least guaranteed half of that estate. So again, we go out and we purchased a home during our marriage. My wife is going to be guaranteed to at least half. I couldn't will her portion off. I could only will up to 50%. Okay, now before you go, this is important. If you're still fuzzy or unclear on how all of this works, community property, joint tenancy, tenants in common, check out this video right here. We go into a deep dive and explanation of how this works, and I give you scenarios. Check out that video. If you have not subscribed, click the little circle, comments, questions down below. See you all in the next video.